Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Tuesday, February 28th, 2023, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we see futures are a little up to extend some gains from yesterday. Dow futures up 81, S&P 500 futures up 12 and a quarter, NASDAQ futures up 47. So on a percentage basis, seeing a little bit of strength, relative strength in the NASDAQ. Crude oil prices up almost 2% to about $77 a barrel. And the U.S. 10-year Treasury yield up a basis point to about 3.93%. Still hovering just above that 3.93% level. We'll look at the 10-year Treasury yield in just a couple of minutes. Do want to walk you through today's agenda. So we're going to start off with the daily market recap, then talking technically. Going to jump into ChartLists. I'm going to show you how easy it is to download all the research that we do. I'm not going to download all of it, but I'll show you quickly using the StockCharts platform how simple it can be to download ChartLists. And then we'll get into the earnings spotlight, and we will wrap up with the three you must see. Before we get into any of that, though, let me take you over to Earnings Beats. For those of you who are new, welcome. Certainly appreciate you tuning in, and to all those who have been with us for many, many years, appreciate your loyalty and support. Without all of you, we couldn't do what we do, and I really enjoy what we do here with the shows and all. So thank you for that. If you do go over to earningsbeats.com, scroll down, we have a free newsletter. I'm going to show you a little bit more about that today when we go through the chart list part of the show. But here, if you just simply scroll down on our homepage, you can find our area to subscribe to the Earnings Beats Digest. Name and email address is all it takes, no credit card. You can unsubscribe at any time. It's published 3 times a week, Mondays, Wednesdays, Fridays. Again, we'll talk about that in just a little bit. But just make sure you go in, scroll down, fill that out, hit that subscribe button. We'll get you started. All right. Excuse me. Moving on to the action. So let's jump into the daily market recap. What happened on Monday? Well, Dow Jones Industrial Average finished up a little more than 0.2%. S&P 500 0.3%. NASDAQ was up 0.6%. Mid caps up a little less than 0.2%, and small caps right at 0.2%. So we were up across the board. We did gap up, though, early, and we were up more intraday. There was some selling in the afternoon that brought us back closer to the break-even line, but we did see just a little bit of buying at the end of the day to make sure we finished in positive territory. Nothing major took place technically. I guess the S&P was able to just barely get back up above its 50-day moving average. So I guess that was one technical positive. The NASDAQ went up and battled its 20-day EMA, could not get through, came back down, but we do have futures up again this morning. And the market, one of the best times of the market in March, during the month of March, is the first week. So we'll see whether or not that plays a role. Normally we do see money flows coming in and the market move higher, but that's just a tendency. It's not a guarantee. So we'll see what happens this month. But yeah, this is an opportunity, I think, now for the bulls maybe to try and get back in charge a little bit, see if we can get through these moving averages. But as I've been mentioning recently, I'm not sure that we're not in already a consolidatory type market where we simply move sideways, unable to break to new highs, really not breaking to new lows, and just kind of go sideways here for a little while. That's very possible. March tends to be a month that's slightly better than normal if you go back on the S&P 500 since 1950. So as we get ready to go into this new month, and by the way, for those of you who are Earnings Beats members, the seasonality report that we issue for the month of March will be out today. I basically have it done now. And we'll also send you the 20 stocks that tend to favor March, or March tends to favor those stocks, depending on how you look at it. But we'll get all that out to our members later today. If you want to become a member, if that's something that interests you, the seasonality part of it, that is just one piece, one small piece of what we do at Earnings Beats. But you can sign up for a 30-day trial 30-day free trial. You will have to give credit card. If you had earnings beats and you're up at the top of the page, it's right there. Start your no-cost trial. Make sure we get the seasonality out to you. All right. Looking at the various sectors yesterday: discretionary, industrials, technology, materials, communication services. Those were your 5 leaders right there. So 4 of those are the aggressive groups that we like to follow. So it was good news to see money rotating back in. I've consistently mentioned the AD lines on the major indices, all pointing higher. Look at the sectors: discretionary, industrials, technology, materials, even communication services. Remember how rough communication services was back in 2022? Everything was going down, prices. Excuse me, the AD line. Well, that's changed. And when we moved up in January, look at the AD line take off. And even with this pullback in the XLC, look at the price action coming down. That AD line sitting there ready for another breakout. As I've been mentioning, there's been a lot of manipulation in the stock market since the middle of 2022. When we go down, we tend to gap down. We don't tend to see big sell-offs. You see big sell-offs by really big red-filled candles, if you're a candlestick fan, where you open at the high and you close at the low. Big red-filled candles. Those are undeniable. That is selling. That is all-day selling. We haven't seen many of those. And in fact, the QQQ, as of, I think it was Friday of last week, the QQQ, I think, had dropped $20 from its high at beginning of February. 22 of it was on gap downs. It actually had gained $2 during the day. You know, a lot of folks are saying, well, institutions are selling. Folks, institutions don't sell at the opening bell. You can't put market orders in for millions of shares of stock if you're trying to sell out of a big mutual fund or hedge fund. It takes time. You've got to sell during the day when there's volume. You can't just put an order in at the opening bell. You know where you're going to get filled? It's not the way institutions get rid of the shares. So this is kind of big. Watching these AD lines, it's not, you know, the end all be all. It's a signal. One signal. It's one secondary piece of evidence. That's all it is. But it's a pretty strong one. And it has remained bullish, as we have seen. I mean, look at the discretionary stocks pulling back. AD line going higher. Technology pulling back. AD line staying right where it was. Materials pulling back. AD lines breaking out. Even industrials pulling back. AD line breaking out. We're seeing it everywhere. Which is why when we get through this little patch, I just say the market's vulnerable here. I'm not saying it's going to go down, because I'm still very bullish. But if we're going to go down, bears, this is your chance. End of February, like I said, February, not a very good month. March, a little bit better than average, but we've had some tough periods in March, and we tend to see leadership in March from areas outside of technology and discretionary and so forth. Sometimes we get that rotation and the market is lifted by some other areas. And we'll talk about that again in just a couple minutes. Anyway, there is your daily market recap. Also, 10-year Treasury yield here, like I said, was up 1 basis point this morning to 3.93%. We closed yesterday at 3.92%. This short-term uptrend remains intact. Got through 390. I mean, if we fail, we did have, you know, on the way down here, remember we had set support at 340, went up, and then we came back down and got through 340, went to 337. Looked like we were breaking down. Well, this was the upside, 390. Looks like we're breaking out. But do we hold it? Do we pull back? Do we go 3 or 4 or 5, you know, basis points above 390 and then fail, kind of like when we went below 340? I don't know. But right now it's sideways consolidation on the 10-year Treasury yield with a short-term uptrend. Definitely an uptrend in place. We have broken out. I would say if you're going to play this as an uptrend, watch that rising 20-day. Long as we hold 380 and can continue pushing higher, looks like 433 is in play. Now, breakout above 433 could spook the market, only because we know what happened back in August and September when we broke out. We also know, though, that when we were setting the high in October, the market was bottoming. So, we're going to watch the 10-year Treasury yield. But I think as long as we stay within this range, 433, the upside, 337 to the downside, that's more of a longer-term period of consolidation. Some of you might be looking at this and saying, well, it looks like a cup. Looks like a cup to me, too. Very possible. And if we have a cup, we go all the way back up to 433, we get a little handle to the side, maybe back to the 20. A breakout would be very bullish for the yield to go higher, which would be bearish for Treasury prices, which move opposite. And that also would be bearish for stocks. I don't think we're going to see it, but hey, anything's possible. And we are in the short-term uptrend, so we need to keep it in mind. All right, talking technically, let's move on to the S&P 500. So we did try to move up yesterday and failed, came back down, closed near the low. That wasn't a great-looking candle, by the way, if I'm being honest. Volume was just so-so. We didn't break down, but we had a much better day intraday and then sold into the afternoon. And that's been an unusual thing. We don't normally sell. We don't normally buy in the morning and then sell during the rest of the day. That's kind of odd. We did a couple days ago. This would have been last Thursday. You can see we had a morning strength. We went down first couple hours, and then we came rallying back. But normally what we see and what we've seen, the more typical moves that we've seen in the market since back in, I don't know, probably May, June of last year, have been gap downs and early morning weakness, and then recoveries in the balance of the day. But yesterday was a little bit different. So today, with futures up, are we going to do the same thing? We're going to gap up and then sell off? I mean, if we do that over an extended period of time, that is not good for the stock market. I don't want to see the gap ups and amateur hour moving higher and then selling throughout the day. That's the opposite of what we've been seeing, and that would not be a good sign. But, I mean, I'm not worried about one day. I'm not worried about a couple of days. But if that becomes a new theme, then, yeah, that would be something to absolutely take into consideration. The NASDAQ 100 NDX, big move up in January, as you can see, topping early February, just like the S&P, pulling back, down just slightly from where we were to end January. So February right now, NASDAQ, slightly lower, fractionally, probably 0.25%, something like that. Looking back at that S&P 500, if we go back to that daily chart, you can see we had closed up around 4080. It looks like 4070, 4080. We're down probably 2-3 percentage points on the S&P 500 through yesterday's close for February. So both are down. S&P's down a little bit more. NASDAQ's holding its own a little bit better on a relative basis. All right, so let's move on. I want to talk a little bit about ChartLists, and what I want to start off with first is our Earnings Beats Digest. I always talk about this at the beginning of the show. For those of you who maybe haven't subscribed, let me just show you what it is. It's very, very simple newsletter. I always say 2 paragraphs in a chart. So this is basically what you would get 3 times a week. So on Monday, essentially it was just a lesson talking about listening to what the charts are telling you, listening to what Wall Street is saying. And a lot of times when I look at earnings, if someone says, what do you think is going to happen with earnings? Well, nobody knows for sure, right? We don't know what's going to happen with earnings, but we do know that Wall Street's been meeting with companies throughout the quarter until the quarter ends and they move into the quiet period. Wall Street can meet with management teams right up until quarter end. They have a general sense based on their discussions with management how the quarter is progressing. Now, we don't know if management's sugarcoating things a little bit. Some management teams do that. You know, they're middle of the quarter or they're getting close to the end of the quarter and they think they're going to reach a target and they kind of pass that along. And then come the end of the quarter, things had slowed down and they didn't quite make it. And so they come out with disappointing news. Wall Street doesn't like that. Wall Street doesn't forgive easily. If you're telling them throughout the quarter that you've got a pretty good stuff, the quarter's going well and that you got your competition kind of beaten and that sort of thing, and Wall Street starts moving into the stock, and then you lay an egg, it takes a while for Wall Street to come around and trust management again. It's one of the reasons why I'm a big fan of following earnings. Part of it's my background, my pedigree as a CPA, practicing CPA for many years. But if management says they're going to do something, I want them to do it. And the reason's really simple, because your valuation is based on future promises. Your valuation is based on your future growth expectations, what Wall Street believes. And if you can't even meet your current quarter estimates, how am I going to trust what you're going to do over the next 5 years? And that's where I believe the trust factor becomes major in terms of valuations. I want companies that are consistently beating estimates. I want management to say, well, we think we're going to do $1 a share, and then come in and post $1.10. Because then when they tell me going out next quarter, we're going to do $1.15, and next year we're going to do $5.30, then I can start to say, well, you know what? This company has a history. This is the way Apple does it. This company has a history of beating its earnings expectations. This is one that I'm going to feel pretty good about, the valuation and the growth prospects. That's why it's so important. Now, here's a stock, Rivian Automotive, and look at it. I mean, it's just been going down. We've had a big rally here in 2023 to start the year. And we started off with, kind of a decent rally into early February. And now here's Rivian rolling back over again, not far from the January low, way below where it was in May of last year. Market's much higher than where it was in May. So what that means is when you go down here and you start looking at relative strength, this is Rivian relative to the autos. Okay, first thing you have to understand is autos were sinking back at the end of the year. They've come back to life a little bit, and they've helped lift Rivian a little bit. But look at Rivian relative to the autos, continues to go down. We are right now at a 52-week relative low, Rivian versus autos. So the only reason that Rivian has gotten this lift right in here, it's not because it's a leader. It's because the entire group has been moving up. So you've heard the old, rising tide lifts all boats. Well, in the auto industry, autos have been moving up, and that rising auto tide has lifted all auto boats. And so there's Rivian moving up in January and February. But make no mistake, they are not picking up any relative strength. Wall Street's not pouring in to Rivian. Why? Well, we may find out this afternoon because they report tonight. Would I hold this stock into earnings? Zero chance. Now, listen, maybe Rivian's got a surprise for everybody. Maybe Rivian's posted better numbers, and maybe they're going to gap up. Maybe the stock sold off so much that maybe they post bad numbers and they still go higher. I don't know what the reaction's going to be. All I know is that this line right here is telling me that Wall Street does not like Rivian relative to its peers. So therefore, I'm going to stay away from it. That's just my personal choice. If a stock is showing that poor of relative strength going into its earnings, I don't want to take any chances with it, because it just tells me that, hey, we may have some bad news coming out. I would much rather see that relative strength going up. And again, relative strength going up doesn't guarantee you a great report and a huge market reaction to the upside. It's just telling you that Wall Street feels better about that stock. And so I would feel a little bit better holding a company like that into its earnings. But you can see this is and then again, talking a little bit about the chart itself. But that's all it is. Paragraph, a chart, another paragraph. And then from there, you can tune into our shows on Monday and Wednesday at Earnings Beats. Got a live link right there. This goes out around 8:30 and our show starts at 9. So if you get this in your inbox and you click on that, either the room will be open or it'll just about be ready to be opened by the time you get in there. So that's the timing of it all. Also, we do a monthly, in addition to the 3 times a week, we have this monthly newsletter. And I set up a folder and I just put them all in a folder. And that way I can always go back and I can go back and look at any of them I want. Got them in order. I think that's a great way, just kind of file them away in a separate folder in your email. But we do a monthly newsletter, and my daughter, Erin, does this. She does a phenomenal job. But it's a monthly newsletter, talks a little bit about what's been happening, what we're up to. If you go down below, it gives you a little bit of historical information. So for instance, going into February, we let all of our members, this is a free report, February seasonality at a glance. This is what we had given out to our members. XLU, utilities not hot during February. If you go in and look at February this year, look at utilities kind of doing what they normally do in February. XLK, hot. Well, if we pull up XLK, remember both the NASDAQ and the S&P went down in February. The XLK is actually higher in February than where it was. So once again, it's outperforming. This doesn't guarantee us that it's going to. It's just giving you some more information, more knowledge. We break down the S&P, showing you since 1950. Here it is down here, annualized performance since 1950, broken down by the various periods of the month, when the market tends to do well during February, when it tends not to. Most of the last downturn came during this period right here. When we talked about, this is February 16th to the 23rd. Look at February. 16th was right at about here. Down right to the 23rd. It was right in there, right in our report. Talk about, I usually have a quick quote in here about something about February. It's not a very good month. We tend to see more strength in the first half versus the second half of February. Well, again, look at February. First half, S&P was up through about the 15th. Second half, it goes down. I mean, this is free information. Gave the two groups. These were two top performing industry groups during the month of February. One was semiconductors. You can see semiconductors higher than where we started, probably up 4% or so. It's been a really good relative performer this month. And then telecom equipment, flat. Looks like it's been flat, was up most of the month, but pulled back when the rest of the market did. But it's been flat, which is better than the S&P, which is down 2 or 3% this month. All the information was given back at the beginning of the month. We give out our top 20 stocks of the month, and that goes to our paying members. But if you like the report and you want to try it, we have a free trial, 30-day free trial. We'll be coming out this Saturday with our report, our seasonality report. It comes out the first Saturday of every month. It'll be out this Saturday for the month of March. So we'll have this information coming out. But then if you want more detail, we give a huge seasonality report, much, much more than this, that you might be interested in. All right. One other thing I wanted to do in this chart list section here is I wanted to show you how easy it is. So if we have, this is in our member portal. So once you sign in, this is basically what you're seeing. But here are our chart lists. And you will see just a ton of different chart lists that we offer. But if you scroll all the way down the bottom, we do upcoming earnings chart lists. And so each day, like for Monday, when you open up on Monday morning, any company that had reported earnings before the market opens is on this chart list. We have every company that reports, I think it's over, any company with a market value over $1 billion, we put onto this chart list. And so you'll have a chart list that summarizes all the stocks. I'll show you how this works in just a minute. But you'll have all this, the companies that report that, before that open. Now, the next day, when you go into Tuesday, you've got companies that reported Monday after the bell and Tuesday before the bell. So we put all of those companies into one chart list, because when the opening bell opens on Tuesday, companies that reported Monday evening and Tuesday morning, this is the first chance that you have, besides after hours, to either jump in or jump out. So that opening gap is usually pretty important on the chart. But let me show you how easy this is to do. So all I'm going to do is I'm just going to copy that password, and then I'm going to click on this link. And then I'm going to enter the password, paste, and I'm going to unlock the list. Now, if you're not a StockCharts member, you're probably going to get some kind of a thing up here that asks you to join. You're probably going to see some ads, but you can scroll through and look at all the charts, even if you're not a member. Now, if you want to become a member, here's the beauty of becoming a member at StockCharts, and I get nothing from you joining. I've used the StockCharts platform for years, but here's what you get. If you save to your chart list, I'm going to replace a list, and I'm going to go down here to my charts, and I think it was, 227 BMO. So that's 227 before the market opens. That was yesterday's earnings before the open. And I'm going to pick that. I'm replacing the list. I'm going to save results. Results are saved. Now I'm going to do one more of these. I'm going to do the one that will apply to today. So let's copy that password, click on the link, paste the password, unlock the list, save to a chart list, replace the list, find the list. There's my 227 after the market close to 228 before the market open. I'm going to save results. And now I'm going to view my chart list. Look how fast we did all the work for you. Here are all the companies that reported yesterday after the close and this morning before the open. Folks, this is free information that we give out. And if we go back to the one I just copied from yesterday, we can, these are the ones that have already reported. This was the reaction yesterday. So TGNA was the worst performer of all the companies that reported earnings yesterday morning. TGNA was the worst. The best, FSR, went up 30%. You can quickly look at every single company that reported. And the beauty of looking at the one today is that as soon as the market opens at 9:30, I can pull this up and see immediately where the money's going. Now, this is the reaction from yesterday. Of course, that was pre-earnings. Today, when earnings come in, if you have this chart list, you'll be able to jump right in. So let's take a look, for instance, we'll just pull up a couple of these. So Occidental Petroleum and Zoom. So let's just do a quick, I'm running out of time, but let's just do a quick look at Oxy. So it's up 0.5%. Zoom was getting a pretty nice reaction, up 5% this morning. But all of this is going to be in one chart list you can check out shortly, just by having the chart lists. Anyway, 3 you must see. Let's look here. I wanted to just mention Union Pacific. Their CEO announced he was leaving. The stock gaps up 10%. What a great way to say, hey, you did a great job. You resign and the stock jumps 10%. Apparently, folks don't like very much. Didn't like the work you did anyway. The last 2 real quick. ENPH, I just see a positive divergence on this one. Stock's been going down. Look at that positive divergence. I think we could have a trip back to the 50. We'll see. And then Mosaic. Mosaic was one of the stocks we provided of our 20 February stocks. Look at it. It made the breakout, went to a new high in February. March, April, not so good technically for Mosaic. We'll see whether or not it can get through all this resistance with poor seasonality coming up. Anyhow, that's it for me. Listen, everybody have a great day. Thanks for tuning in. And come on over and join us at Earnings Beats. We'd love to have you. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.